Hello, my name is Jeff, and what I'm doing is I'm about to go over a program with you that you can use to help pay your off all your debts, and that you can also stockpile your money into it for a tax-free retirement. Now, I want to just share my screen with you and go over some of them. But before I do, I'd like to explain a little bit of why I do this. My wife and I, she got brain cancer when we were had our children, and they were all under the age of 4, and we lost her income. We had been paying extra on the house to try to keep the house and to pay it off early. And then when she got brain cancer, we lost the house. So all that money that we had put into it to pay it off early, we lost. And this is a program where you can have the mortgage protection set in place. You can use it to help pay off your house early and pay off all your debts and start stockpiling money for retirement. Now, what I want to do is I want to share my screen with you so that um, you can see some of the information that I'm sharing. Hold on, let me get to it here. Now, can you see my screen? Okay. Hope I'm sure you can. All right. Let me ask you this. Are you 100% sure you're going to have a great retirement, or do you have some doubts? Have you lost money in your 401ks and do not like losing your hard-earned money? What if I could show you how to get out of debt in 9 years or less, including your mortgage, without spending any more money than you are today and adding a lot of it to your retirement? If this is something that is of interest and you'd like to find out more information, here's my number. Text Getting Debt Free to 615-319-4139. Okay. And here's our life journeys. Your journey through life will be unique, filled with success, triumphs, and setbacks. Why? Well, we all go through the game of life, right? You've heard that before. We are kids. We go to school and obtain student loan debt. We get married and buy a house. And then we obtain a mortgage and auto debt. Then maybe we have kids and incur even more debt with credit cards. It can feel like we take one step forward and two steps back with each new life event. Have you ever had a catastrophe in your life or seen someone that had a catastrophe in their life? Then we get to retirement, and guess what? We're still in debt. There's a debt epidemic, 13 trillion 600 or 13 trillion 6 million in total debt. There's auto debt, there's credit card debt, student loan debt, mortgage debt. There's all different kinds of debt. Now, here's the mortgage or the housing debt, and there's the non-housing debt. And it's an epidemic that continues to rise. Debt is in this country is at an all-time high. I have a question for you to consider here. Do you know anyone who has tried to pay off their home early by giving extra money every month or every year? Are you doing this also? This is a great plan. Do you know anyone that has done this only to lose the home and all of the money they put in due to the critical illness or an accident that caused them to lose an income or even a portion of the income? My wife and I did this very thing. We put in extra money every month to pay the house off early, and then she got cancer, and we lost her income, and we lost our home. To find out what your numbers will be, call or text the number and let's set up the appointment for the first step to seeing how soon you could pay off your bills and also to see how much you could save toward retirement if you choose to proceed to the next step. No obligation for our debt-free consultation. Would that help you? The average American household in this country is about $250,000 in debt and is only about to put away about 30 or 3% of their money into savings in a lifetime. A lot of financial advisors will tell you to just increase that 3%. Just put more money into savings. But most of us are already saving as much as we can. We are doing the best we can. Did you know we pay 34 cents of every dollar in interest toward lenders for auto loans, mortgages, student loans? Additionally, we each pay about 40 cents of every dollar on taxes. This could be property tax, gas tax, sales tax, estate tax. There's all kinds of taxes, right? This only leaves about 23 cents of every dollar that we have available to spend for our lifestyle, which is going to be money spent for clothes, food, insurance, coffee, going out to eat, putting tires on the car. What does this really mean? What does this really mean? This means we pay 74 cents out of every dollar we earn to banks and to the government. 74 cents to the banks and to the government. How much more money could you have if you don't pay the interest to the banks? You pay that interest to yourself. Okay, saving for retirement. Over the lifetime, at the age of 65, our assets would be, over the lifetime, we've made $2 million. Most people have $2 million pass through their hands during their lifetime. But at retirement, that same person only has about $60,000 out of the $2 million to live off of. This is not the American dream. How much more would you have saved for retirement when you get debt-free? Let's meet Renee and Anthony. They are real Symmetry customers that benefit from the Debt-Free Life program. Now, here is their financial worksheet that they filled out for us. Here, Renee and Anthony's financial analysis. You can see they're 37 and 35 years old. They make about $7,000 a month and would like to retire at age 65 with a $5,000 monthly income. They currently have less than $100,000 in a traditional retirement account. You can see on the bottom of the worksheet, Renee and Anthony indicated the following concerns. They want eliminating debt. They want saving for retirement more. They want to provide for education. They want to control their spending. They want to establish wills and trusts, and they want to maximize their savings. We asked them if they had any specific plans currently to accomplish this goal, and they said not yet. Their desired monthly retirement income, they both want about $5,000 a month with a total of 10 grand a month. So that would make it where whatever you got from Social Security, you would have to pay tax on it. And you would have to give back $1 for every $2 you made over a certain amount of time, and a certain amount. I'm guessing you are like me and want to keep all the money you can instead of giving it back to the government, right? Keep listening or watching. I am about to show you a way that you have a retirement program that you don't pay taxes on in retirement. And you can use it to help pay off your bills and then stockpile it into a tax-free retirement idea. It's a tax-free retirement idea that has been around for since 1908. Maximizing savings. Okay, do you like that idea? You want to hear more? Keep listening. Maximizing savings. I have a question for you. When you think about maximizing savings, is there any money that you spend daily, weekly, or monthly that you would be willing to allocate to moves to more savings and building financial freedom for the future? Like the $7 cup of coffee daily, or maybe going out to eat daily for lunch. Okay, that is great. So, how much do you think that would add to your monthly savings and to your tax free retirement idea? Now, here's their savings and investment thing. They've got a emergency fund, which I recommend for everyone, and they got a 401k. They were making monthly contributions for savings of $25 a month to the emergency and 6,000 cash accumulated so far and 3,600 a year into the 401k. We can all agree that having emergency fund is the best idea, right? So I have a few questions for you to consider. How would you feel about putting that emergency fund into a program that would blossom into a tax-free check to your family? This does not get held up in probate that you still have access to when you need it. And this grows with compound interest. Do you like this benefit? What about using this emergency fund twice at once, and one part was gaining interest and the other part helping you pay off your debts? Okay, let's talk about this 401k, $300 a month. Say you have worked for 10 years and built up your 401k to 125k, and then the market does a correction and goes down by say 20 or 30, maybe even 50%. And you lose anywhere between 25k to 75k that you lose of your hard-earned money. How would you feel? And how long do you think it will take to get all your money back? If you lose 20 to 50% of your 401k when you are retired, what will that do to your retirement income? I have talked to folks that have lost 250, 500, even 900k and have had to go back to work. Would you have to go back to work? So, how would you feel about a retirement idea that does not lose money in the stock market and that you can get money from tax-free during retirement? Do you like that idea? Would this be a benefit to you in your retirement years and your working years? Many advisors say to get the free money if your company matches what you put into the 401k, at least that much, but not much more, if any. So here's another question. Will it really make a big difference if your company matches what you put in, but you lose half of what is in there, and it takes 5 or 6 years to gain it back? Would you consider a plan that the company can also match what you put in the retirement savings, but it does not lose with the stock market. Just something to consider. Once it is in the program, you don't lose it. And also, if the company is sold, it is yours, no loss from the company being bought. You would like that idea. What do you say? Okay, now here's all of their debts that are written down, their loans with their interest rate, what their payment is. They can have a debt of $460 for Visa card, 200 for medical, 2000 for medical bills, and Discover card, some furniture loan debt, one car, and a mortgage. You can see their average interest rate was about 10%. Adding up all their debts, they were paying $2,177 a month toward a total debt balance of $180,189. How much more money would you have if you paid off all your bills and you put all that 200 or $2,177, or look at into your retirement fund? What loans do you pay every month that cost you interest? And how much could you put into retirement if you took all that money and put it into a tax-free retirement program that does not lose money when the stock market goes down? I would ask you to kind of do a rough draft of your loans and see how it is going and how you might like to pay all your debts off in 9 years or less. Do like this is with the 4 columns, and then add the 5th column to put down how much, if any, you are paying extra toward the loans. Then at the bottom, if you want, kind of list some of the things you would be willing to avoid in order to pay off all your debts in 9 years or less. Things like a cup of coffee every day, not going out to eat every day for lunch. Take a lunch of leftovers instead of buying a new car. Get a new or used car. Now, total all the bills and payments. How much do you have in total payments every month to loans? Take that number and let's see how much money you will have in interest that can go toward a retirement plan. Okay, here's Renee and Anthony's debt. It's $180,000. Their interest paid would be $199,959. That's for the debt payments for 30 years. Okay. Now, but look at this. We ran a report for Renee and Anthony through our program that outlined their real debt. Through this report, we learned that if they continued doing what they were doing, they would be in debt for 30 years. They would pay off their $180,000, but they would also pay almost $200,000 in interest on top of that. So we learned that their real debt was $380,000. Of course, this was a shock to Renee and Anthony. When we run real debt reports for our clients, all of them are shocked to see how much interest they would pay out over the long term if they continue down the same path. It would be worth it for you just to find out about your real debt, how much interest you're going to pay if you pay all your bills off in the long term. I got to have a drink of water. Now, You know how the interest rates really work? 5% interest on a mortgage loan doesn't sound like that's that bad, right? On a 30-year fixed loan, $300,000 mortgage, your monthly payment is $1,610. And then your 5% interest. Okay. L- let's look at the actual amount lost on a 5% mortgage. Okay, this is a 5% mortgage. The first year that you're paying your house payment, your payment is $1,610. The interest charge on that is $1,250, and the principal that's going to it is $360. So in all reality, you're paying 78% interest on that uh, first year. And then you go over to year 10, you're paying 65% interest, and only $564 is going toward the principal. So by the time you get through, let's go to the 20 year. Okay, the 20th year, you're paying 42% interest, and the 30th year, you are paying 5% interest. So your total payments is 579,767, and your total interest paid is 279,767. Now, if you paid this off in 9 years with your other debt, or just this alone, if you just paid off your mortgage for $300,000 and got out from underneath that interest, your savings would be $279,000. However, you're going to be paying for the interest for the 9 years, so you may be paying like 70,000 in interest. But that's a lot better, um, paying 70,000 in interest instead of 279,000. And then you could take that 200,000 and stockpile it into your retirement program every every month. And there's the number. Text getting debt free to 615-319-4193. Okay. Move on. Okay, what would you say someone's options are to get out of debt and then eliminate the money they are paying in interest? Work harder, spend less, saving more money, refinance, or consolidating loans and hope for a better interest rate? There's also the portion of the option of snowballing debt, paying off one debt at a time, using the savings from the eliminated of one debt to help pay off the next. You know about this. You may be doing this already, but that can take a long time, right? And this strategy has a success rate of less than 1%. But did you know that you can optimize the debt snowballing strategy leveraging life insurance, instead increasing the success rate tremendously and cutting down the time significantly? There's a better way. What if I could eliminate your debt in 9 years or less without spending any additional money? I'm going to show you something that you probably haven't considered before, something that could change your life financial and your children's financial future. Okay, the debt-free life approach. At Symmetry, we think there's a better way for you to allocate your money, where you don't pay 74 cents out of every dollar you earn to banks and the government. Our Getting Debt Free program is designed to reduce the amount of money you pay towards interest and taxes, and increasing the amount of money you have available for lifestyle purchases and to put towards savings for the future. Our program is also designed to bring your debt down to zero? And how would eliminating your debt make you feel? So you have more debt after using debt-free life program, you have zero debt. With debt-free life, you can reduce interest to lenders, eliminate debt in 9 years or less, reduce taxes over time, improve cash flow to save money, retire with tax-favored income. You like to be able to save more money for retirement, don't you? Now here is reallocating inefficient dollars. For example, you have the credit card where their minimum payment and they're paying they're paying over every every bill that they have, they're paying extra. You may be paying extra on just one bill, and that's good. That's good. And the program with Debt Free Life, with the life insurance program, it's got many benefits that go above just paying off your debts early. We help clients find inefficient used dollars that, if redirected, can make a powerful impact on their future, right? And we like to use the 80-20 rule, okay? Based on your information, we will figure out how to effectively redirect your inefficiently used dollars. Our plans are strategically designed for real life, for the unexpected and the expected. Emergency spending will happen along the way. Let's plan for it. Our plans don't tell you to not spend money on things you like or only eat rice and beans. Our plans help you incorporate funds for emergency spending 20% while setting yourself up for an 80% retirement. Now, what do you think about the future of taxes? Do you think they're going to go lower? They're they're going to go higher, or are they going to stay the same? Now, what would you say? Most people agree that taxes will increase in the future, especially in the retirement years. You have less deductions and you want to have your home paid off. So, you don't have a house payment in retirement, right? America as a whole has trillions of dollars worth of debt. Remember, and the federal government only has one bank to go to. Do you know what that bank is? It's us through taxes. So if you think about that, taxes are probably going to keep increasing, possibly. Would you accept this business proposal? Okay, so let's say a friend or family member approaches you with the business proposal. You're going to front all the money, take all the risk, with the possibility of losing some of it, work on the business every day, and then 30 years from now, your loved one will come to you and tell you that you still owe him or her money, more money. They will also tell you that I know you are doing all the work and investing in this, but you cannot take out any money till you are, say, 60 years old. If you do, you will be penalized a percentage by your partners. How does this business idea set now? How do you feel about your partners? Now, do you want to go into business with this person? The answer is probably no, but we do that with the government, with traditional retirement accounts. Okay, let's say uh the you know how the IRA works, right? Or even a 401k. You probably do. Most people do. But let me show you how we think they really work. Let's say we put 5,000 per year in an IRA earning 10% with the rule of 72. We know that those funds will double every 7 years, some from 45 to 52. It will go from 5,000 to 10,000. It will double again in the next 7 years to 20,000, and so on. What advantage do you get from utilizing the IRA or 401k? If you set a tax deduction, you're right. If we put money into an IRA, we get a tax deduction. So, in this case, at age 45, you will be able to deduct $1,250 at age 52. That deduction is $2,500 and so on. By age 66, you've saved 10K in taxes, correct? But when you pull that money out from your IRA at age 66, at a 25% tax bracket, we know it could be more, it could be less. What do you owe the government in taxes? If you said 10K, you're right. So my question is, where's the tax savings? Where's the tax savings? My point by showing this is that by reducing the tax liability, you can put more money in your pocket. Do you agree? Okay. Do you mind if I play the devil's advocate here or bring up one of the major hiccups with this? What if you have a stock market go down 2 or 3 times in that time span and you lose like 50% altogether? Now, instead of having 40K at retirement, you have 20K at retirement. How would that affect your financial situation during retirement? Let's bring it down to your family. If you had 100K in your 401k or your IRA and then it lost 10%, and before it could catch back up, a year later it dropped another 20%. Then, a couple of years before you retire, it does a nosedive and you lose 250K. And now your retirement fund is down from 750K to 500K, or even if it was 500K to 250K. How is that going to affect your finances in your retirement years? This is why over 1 million folks in retirement have been going back to work. This is why so many people are getting into this debt-free idea and stockpiling the cash in the tax-free retirement program. Which idea do you like? Or both? And the thing with this retirement program, it doesn't lose money. It's not connected to the drops of the stock market. Okay, let's look closer at a $10,000 investment over 28 years at 7%, working with the average tax rate of 25%. This is what your account would be worth. 441,000 with a tax account, 49,000 with a tax deferred account, and 66,000 in a tax-free investment. Now, with the taxed account, you may have, with the drops of the stock market, you may have like 20 or 30K in there. So when you go to start taking it out, you're going to have to pay taxes, right? 25%. So if you've got $20,000 and you're going to have to pay 25%, that's 5 grand, right? And with the 49,000, it's tax deferred. So you're going to have to pay taxes when you start taking it out. Now, this tax free here, this $66,448, that is in the debt free life program that you get in retirement tax free. It grows tax free and you take it out tax free. You look at it like it's a life insurance policy married to a Roth IRA. That's what a lot of people like to say. So now you've got this $66,000 in savings that it has earned interest and stuff over the years. Is that a good emergency fund? Would you think that's a good emergency fund? And that is not controlled by the government. And like I say, it's accessible anytime, right? You like that idea, right? So how could you use the 66K for emergency fund for you? If you get cancer, or if you had to pay a high deductible for a surgery, or something happened and you couldn't work for 6 months. How could you use this, or how would you use this to double in size every 2, 3, or 4 years? When you double this in size every 2 years, how much money would you have for tax-free retirement? Keep in mind that you will not lose money and you will not be paying all the fees for the company managing your 401k or IRA. Check and see if they are charged even when you lose money in the account. Most of them do. If you do pick one of these options, which one would you pick? It is clear to you, right? That knowing the different ways assets can be taxed and getting started taking advantage of them early on in life is a really good way to make sure that your retirement is going to be what you want it to be when you get there, right? How do you feel about not losing money in your savings for retirement plan? I'm not saying to move all your money out of your current retirement account. I'm just explaining that you can redirect some of your contributions into a program that can help maximize your cash flow with less risk. Now, here's the added tax and other benefits. Okay, there's no penalty before 59 and a half, does not increase taxes on the Social Security. It does not show up on your 1040 form. There's no estate taxes in most states and no state tax in most states. Passes to beneficiary tax-free, does not affect FAFSA for college. You can stockpile for tax-free retirement and access money tax-free for investments. You can access it for down payments on a home or investment properties. Businesses can use this idea also to pay their quarterly taxes. Access for living benefits. This program has critical, terminal, and chronic illnesses, living benefits, where if something happens that you get a critical illness or a terminal illness, you can access some of this money while you're still alive. You don't have to die to use it. Okay, you can access for money-making investments by like buying real estate, start a business, pay for college, buy business equipment, gap funding for other people, buy tax liens, make loans to car dealers, loan out to businesses, etc. Access for down payments on a home, build and live in every 2 years. If you build a house every 2 years and live in it for those 2 years, you get a tax break. Use of working capital for your business, also paying quarterly taxes. So now comes the most important question of all. Now that you see the way this can work, how would you use it to build up your stockpile of money, to make it grow faster, and to pay off your bills even faster, or to build up your retirement fund faster? How would you use this in retirement to keep the money flowing? Here's my number. Text "getting debt free" to this number, and we will get back with you. Remember Renee and Anthony? Their current retirement savings was $36,500. Their monthly contribution was $300 monthly, 5% annual interest. At the end of 30 years, with $300 a month contribution and a 5% return rate, they would have around $400,000 before taxes. After taxes, in a 25% income tax bracket, they would really only take home around $300,000. So this program, the 401k, is costing you $100,000. Do you know a family member or a friend that has lost money in the 401k or IRA that is connected to the stock market? So this amount could be less because you lost your hard-earned money in your retirement savings. What about all the fees that are being charged every year to manage your 401k or IRA? Do they go down when you lose money? How much are these fees costing you? Okay, Renee and Anthony, after using the Debt Free Life program, they were able to get out of debt in 7.8 years. Instead of close to $200,000 of interest paid, they only paid $77,220 in interest, a savings of $122,739. Since they were able to eliminate their debt in 7.5 years, they freed up that $2,177 monthly payment to debt and were able to start redirecting that into savings for retirement. So that means if they continue using the program and saving that money after they got out of debt for the remaining 22.2 years at 4% interest, they would accumulate over $1 million in a savings account, tax-free, in a savings account that they have access to, a lot of it in their cash value. And they also have access to it if they get cancer, heart attack, or stroke, or a terminal illness. The current plan, now you remember their projected retirement, if they continued down the path they were on, was around $300,000 at the end of the 30 years. With the Debt Free Life program, they were projected retirement is over $1 million. This means if they didn't decide to go through the debt-free program, it would have actually cost them $820,000. $820,000. Wow. That's a lost opportunity cost, isn't it? Did you get this? If they stuck with their current plan of putting $300 a month into their 401k, it would have cost them $820,000 to do that program. Whereas since they've decided to do the debt-free program, get out of debt and stockpile all the money they can into retirement, they have they have 1 million, over $1 million in tax favored savings. That's a tax-free account. They've saved $122,000 in interest. Yeah, it's hard not to get excited about that. You need to call me or text me. Getting debt free year to date. Debt free life programs have provided. We've worked with Renee and Anthony. We've um, helped save 17,306,000 in interest has been saved. 115,684,000 projected increase in retirement. 53,602 debt to be eliminated. How exactly does this work? If you looked at three phases of money, you have maximization, accumulation, and distribution. The three phases of money. Most people look at solely accumulation, but we need to focus on all three of these because how we take out our money and whether or not it's taxable or tax-free makes a huge difference moving forward. In the debt-free program, we take all three phases into account, right? Now, how do banks leverage cash flow? This program works by turning you into your own bank. Do you know how banks leverage cash flow? As bank customers, we put into the bank and earn about 1% return off of it. But the bank, as a business, then takes that money and lends it out to other bank customers at different interest rates. Banks turn money over 7 times. So for every dollar put in, the bank can loan it out 7 times. So if you look at this example, you earn 1% off of $1 you put in. The bank, because they are charging different interest rates on loans, that dollar out, loaning that dollar out 7 times at different rates earns 136%. So they've loaned it out at a credit card, 18%, 12, 8%, 23%, 10%. They loan it out at different. And I'm going to show you something else that's going to blow your mind. Would you like to be the bank? Are you following me here? You can be the bank through the Debt Free Life program by giving your dollar 2 jobs, by savings and creating compounding interest for yourself. I got to have a drink of water. Making this would be making you would be earning compounding interest for yourself, making your dollar work for you, not someone else. How would you like to earn even 25% or 30% on your money and it be growing tax-free in your retirement fund that does not lose money in the stock market like the 401k or the IRA? How many pros can you think of by getting out of debt and having a stockpile of cash you have access to that is invisible to everyone else? When you meet with me the first time, ask me about the accelerated banking idea to get out of fast to get on a faster track to pay off all your bills. Okay, now this next slide's going to blow you away. Okay, here, what I was telling you about of how the bank will loan out money 7 times. Okay, now I want to get this idea to explain it where you can see what I'm talking about. Banks have the same idea where they own bank owned life insurance. That's what it's called. It's called BOLI, BOLI, bank owned life insurance. Now, what they do with this life insurance, Bank of America has 24 billion in life insurance policies, the cash value life insurance policies, right? And what they do is they stockpile the money that you put into the bank into this cash value life insurance. Then what they will do is the cash value, they will take that cash value out and they will loan it out for a credit card, for a car note, or for house note, or whatever. They will loan it out for that, right? And what they're doing is they're gaining interest on their cash value life insurance, the cash value in the life insurance policy. Plus, they're gaining interest on whatever money they've loaned out for the house, right? So they're in they're in it to make money, and they're making money, right? And here, Wells Fargo Bank, they have 18 billion. JP Morgan 12 billion, US Bank 7 billion. Wait, I went too far. Okay. Over 2 billion of cash went into IULs from people, business owners, and others like you in 2019 alone, right? And in 2019, 3,800 banks owned $190 billion in life insurance policies. Now, this is what you do to build your future, your financial freedom future, and getting out of debt. This will help you get out of debt and stockpile money that you have access to for retirement. In 2023, well, let me go back. Cash value life insurance for IULs was up to $897 million in premiums in the third quarter of 2024. And that's from bankrate.com, right? Now here's 2.3 billion in 2023 went in, right? And here's some growing empires with the compounding interest with using the cash value life insurance. These are companies that have used it for a long time. Disney used it, Pampered Chef used it, McDonald's used it, Berkshire Hathaway used it, and here's even more companies that have used this idea: General Electric, AT&T, Garnet Publishing, Comcast, Verizon, Walt Disney, Crown, Amway, Panera Bread, Harley Davidson, Office Depot, Bell South, Bed Bath and Beyond, and Anheuser-Busch, CVS, and most of the folks in DC on the Hill. Yeah, they use it a lot. John McCain used it for his presidential race. Okay, leveraging life insurance. What you're doing is you're redirecting insufficiently used dollars into a policy, allowing policy's cash value to grow, and it will grow while it's in there. And you can take money out and it doesn't affect your cash value. The cash value stays there. So you're using it in two places. You're using it to grow compounded interest in the cash value, and you're using it to pay off your debt. Okay. And it's somewhat hard to comprehend, but it works. A lot of people are doing it. And I know you may think, well, this sounds like a scam. Well, yeah, sometimes you just got to think outside the box. When you start doing, making money and you want to have that financial future, there's a lot of things you can do. And this has been around. you know, and you can also borrow from the policy's cash value, like I said, with no penalty or taxes. You pay off all your debts, repay loans within the policy with freed up cash flow, and finance future purchases. And you can also leave a legacy with policy's death benefit that goes tax free to the your beneficiary. Okay, now the debt free benefits reduced interest to lenders, eliminates debt in 9 years or less, reduces taxes over time, and improves cash flow. Retire with tax favored income, right? Now, I would like you to do me a favor. May I ask you, or would you do me a favor? You and your partner sit down and watch this and follow some of the suggestions that I said about writing out your bill, how much you're paying extras. Now, do you like the idea of getting out of debt? You interested in a tax-free portion in your retirement? Do you have an emergency fund? Now, would you like to set one up? Do you see how the emergency fund and the cash value life insurance has more benefits than just being in the bank account? And if you've got an emergency fund, you can take a portion of it and put it into the debt-free program. If you could get debt-free in 7 to 9 years, how much extra would you put in to pay all the bills off? And would you stick with the plan? Would you like to stockpile all your loans into a tax-free retirement plan when you get all your loans paid off? What in this video stuck out the most? What caught your attention? How would you use this to grow faster when the loans are paid off or before? Now, here's the number that you can call. Text "Getting Debt Free" to 615-319-4139. Okay, the next step. When would you like to reduce debt? When would you like to improve your cash flow? When would you like to reduce taxes? Do you have a plan to get there? If I can put a plan together that makes sense to you and fits in your comfort zone, and it puts you in a better financial situation, would you be willing to make some changes by redirecting some of your money, not spending any more than you are currently spending? And remember, this is a free consultation, no obligation on your part. The first step would be we would be going over, I would be asking you some health questions and also some financial questions to find out where you are, where you want to be, and how we can plan for you to be there. Like if you want to have $6,000 a month in tax-free income that doesn't show up on your taxes, that goes along with your Social Security, then we can figure out the numbers. And just like I say, the next step, text me "Getting Debt Free" to 615-319-4139 so we can look at your numbers. And I have to see if you qualify. It is a life insurance policy. I myself, I can't get life insurance because I'm dealing with cancer now, and I've had cancer before. So I can't get life insurance. The time to get life insurance is now. It will never be cheaper than than right now every day. All it takes is one doctor's visit, one prescription, and it will kind of hamper you in getting life insurance. Sometimes it will make it where you can't get life insurance at all. Sometimes it's just a little tougher to get the life insurance. But anyway, text getting debt free to this number, and let's just go over your numbers and see what. If you decide you want to move forward and go into the plan, that's great. If you decide that you don't want to, that's up to you. No hard feelings. And you have a blessed day, and I look forward to working with you and helping you plan a financial future where life's curveballs won't knock you out of your house. Talk to you later. Have a great day and a blessed day. Bye. Oh, and there is a channel that you can listen to. There's another one I will hook to this video that goes into just retirement and some of the tax codes and all that stuff that is informative. So you may want to listen to that too. I'm going to stop sharing the screen now. Okay.